Hi traders, and welcome to the latest edition of the Keyzone Traders Trade of the Week. We took a week off last week due to all the big announcements that we had going on with our anniversary celebrations, but we're back this week to take another look at a trade that we've taken this week where we can actually learn the most from it. And this week we're going to take a look at a trade that we took on the FTSE earlier on in the week where patience is required, especially in the current market conditions. Hi there traders, so this is a trade that we took on the FTSE on Wednesday, and we said that if the FTSE held 75.38 to 48 aggressive support, then we could see moves higher. However, acceptance below 38 to 48 could see moves towards support at 74.75 to 74.84. We did have FOMC on Wednesday, which meant we had to exercise some caution. We have to be aware that maybe the markets are not going to have too much volatility ahead of the announcement, especially this week where the markets were placing a lot of emphasis on what the Fed had to say because of the issues around rate rises and stuff at the moment and inflation. So the markets were a little bit nervous and they had been contracting all week, so we had to be careful with that as well. So let's go and have a look at the trade that we took. So here's the market. This is the 75.38 to 75.48 blue area. We'd held the resistance zone above at 75.61 to 75.71. You can see that we'd held that as resistance here. We then got this really impulsive push down on the open. So the market opened up here. This was the opening candle of the cash session. You can see we've got this push down. Push up, made a lower high and held this zone as resistance, and then got this really strong push down. We broke below the zone, and then we had this corrective pullback to the moving averages, and we set up what we was looking for here was whether we had the acceptance back below 75.38.48 and then head lower. So we was looking for a reversal signal, having had this really strong impulsive push down, and then the break below. We then got this signal here. Now this in itself is a signal to take. However, because of what was going on in the markets at the time, I wanted to wait and see a little bit more confirmation of the fact that we were going to hold this zone as resistance rather than maybe come down and then push higher again. We had this sort of sloping upwards channel that had started to develop as well. Now, I don't trade channels as such. However, I do look for a disruption of clearly defined patterns, and we had that pattern there, and we also had started to develop the base of that channel here. Notice how these three lows had all coincided with the fact that this was a symmetrical channel. So I was looking for some disruption of that as well. So when we got the next candle here, where we started to break below, to get the strong close below the moving averages, we started to come back towards the channel. I was looking for a break of this channel. So we actually entered the trade just below the channel at 75.40. We had a stop just above the zone here at 75.49. It was actually 75.50 if I remember right. We had it, and we could target down towards this zone here. We actually had 75.20 as a target. So this was the trade that we took. Now, as you can see, we got triggered in, and the market moved down quite quickly straight away. We then got a push up, but notice how price then rejected what was the base of the channel. It used it as resistance and then started coming away again. And this was another reason to support the fact that we had broken this channel. We had caused the disruption of this channel, and it was going to hold this zone as resistance and follow in with the trend, in with the previous impulsive move. We actually then took some risk off the table, as we always recommend here at Keyzone Traders about managing risk. Risk management is imperative when you're learning to trade, or when you're just to create long-term success in the markets. We always want to be focused on risk. So we took some half profits around these lows here that had been created, just in case we got that chop that could potentially happen ahead of the FOMC. We then left the rest of the market, the rest of the trade to run, and we did get this little push up here, but our we still managed to stay within our parameters, and then we got the nice move down, eventually hitting our full target down here. So you can see how showing that patience rather than just jumping into that trade there. However, although this trade would have had better risk to reward and a higher entry, just because of the fact of this channel, just because of the fact that we had the FOMC, this could have quite easily come down, held the bottom of that channel there, and then pushed higher again, and we would have been stopped out. So just waiting for that little bit of extra confirmation, that extra signal to make sure where the market is communicating to us that it does want to go in the desired direction can help keep you safe in the market. And even by doing so, you can still get some really nice risk to reward trades out of the market. So I hope you found this useful. A couple of more advanced concepts there, but also hopefully some that you can see are relevant, and that ties in with our reports that we give out every single day as part of our Key Zone service. We give these reports out first thing in the morning before the markets open in the European session on the FTSE and DAX, and we have also now started doing this same for the S&P 500 and the Dow Jones in the afternoon US session. These are completely free, so if you want to take advantage of these recaps and these reports, come sign up to the Key Zone service. It's completely free. Come join the Key Zone Traders community where you get to chat with other like-minded traders about the setups and the opportunities in the market. You can also use these reports to hone and build your pattern recognition skills. You have 4 markets each day where you can use this replay function in TradingView to replay the day's price action in conjunction with our reports and start making decisions as if though you were in real time, but doing it in a simulated and safe environment, so you can build those pattern recognition skills, build that decision making process. It really is a great way to accelerate your learning as a trader. So I hope you found this session useful this week. We'll be back next week. Have a great weekend, and I'll speak to you again soon.